All right, so we talk about it a lot, right? You know this battle, this sort of tug of war happening in the market right now. Now, the stock market still believes there's going to be more than 3 rate cuts. Take a look at that. We're at 5 right now. The Fed, though, they keep saying and they keep articulating they're in no rush to do any cuts, and that they're going to stick to the promise of 3. Well, my next guest says that Fed pivot euphoria is alive and well, and that's a good reason to remain bullish. I'm going to bring in Kobeissi editor-in-chief Adam Kobeissi. And Adam, you know, it's intriguing because the S&P 500, obviously just getting through this 5,000 level, this is one of these round numbers where people start to second-guess the rally, thinking maybe, okay, this was a great move. It had a nice move since last October. But you're saying, no, this is more of the beginning than the end.
Yeah, and I think that goes both ways with these psychological levels. On the other hand, it's like we're in all-time high territory. We're above 5,000. Maybe now's the time to get in. But also, I mean, we're seeing a market now where the Magnificent Seven basically are the stock market, and the stock market is the Magnificent Seven. And that once a Fed pivot was on the table, and we saw this really start in November, equities began rising sharply. The tech sector was given the green light for more upside, and now you have companies like Nvidia have added $600 to $700 billion in market cap in 3 months. I just think it's a very tough market to step in front of. You're much better playing the trend of the upside, buying the dips, and then once the market reverses, once there's a clear trend reversal on the technical basis, it's much easier to get in short then. But if you're going to keep trying to time the top, we've been advising against that. We still think there's more room to run. Mm-hmm. And even if the Fed doesn't cut 5 times, which we don't think they will, near-term euphoria is alive and well, like you said, and like we've been saying, and I think we can go higher here.
And I love the idea, the folly of trying to pick the top or guess the top or bottom is just so, I always say the only time people have ever done that, there's only 2 times they've done it. They were lucky or they were lying. All right, let me ask you about the bond market here. The TLT is not looking that great, but you like bonds here.
Yeah, so it's interesting because as the year kicked off, we saw 6 rate cuts priced in. Now we're down to 5 after Powell kind of pushed back on the March cut. And I don't think they're going to start cutting in March, particularly as if next week's CPI number comes in hot. I mean, we saw a rise in December, and then now for January, if it rises again, that'll be the first 2-month increase in nearly 6 months. But we still see this euphoria alive and well, like I said, and it's interesting because equities are pushing higher. TLT's been kind of stagnant. I think as more data comes out and as these rate cuts kind of come back onto the table, I do think bonds can continue higher, especially as the technical picture for TLT is still in an uptrend. And I think no one wants to step in front of the rally in bonds, stocks, or anything really risk on right now, which is particularly interesting to see.
So then, and at the same token, you're bullish on gold as well, right?
Exactly, because we think, and gold also has another facet to it in that there's the geopolitical tensions going on, which have kind of aided the metal over the last few months. But also we see, a weaker dollar in the same kind of trade, this Fed pivot trade. And if equities can push higher, there's no reason that bonds and gold can't follow with it in these market conditions.
WTI is starting to act better. I mean, there have been so many false starts with this thing, and back in October 7th, that deadly day of the Hamas barbaric, attacks in Israel, the overarching theme was that, hey, we were going to go at least to 90, maybe 100. And, after the initial bounce, we've been down. You're bearish on oil still, right?
Yeah, so we've seen just about every rally sold over the last 3 months. And I think a lot of what's happening is you have supply side dynamics going on, like you're mentioning, in the Middle East. But on the other hand, China has become a huge worry from the demand side. And even as OPEC kind of holds production cuts, which it's questionable even if they're going to maintain cuts throughout this year, we see U.S. production at record high. There's non-OPEC production is at a record high. So with demand starting to fall off, China becoming the wild card, it's very, very dangerous fundamental picture to get long here. And I think the technical picture itself is also pointing lower. So we actually think oil prices, we put a note out to our subscribers this morning, we think oil prices are going to go back below 70 and kind of also help get inflation back in line, just like we've seen natural gas down to a 42-month low today.
Hey, I got to let you go. Is there a stop loss on that WTI trade?
Yeah, I think we're seeing around 83 because if we break above that level, you're starting to form higher highs. You're opening for 90 plus, but to get there is going to be very difficult. And I think for now, lower oil prices are ahead.
All right, Adam, great seeing you, my man. Have a great weekend.
Great to be here. Thank you.